But in the Tesla story and the, we also keep looking at that stock with one big question. If it walks and talks like a car, it must be a car. And so it has four wheels, it drives around. All cars will be automated with AI eventually, GM will. Everybody else trades at a 15 to 16 multiple. They trade as if every car is being shot to the sun at some stratospheric number. Yeah. Which happens first? All GM goes to a 300 PE or Tesla goes back to 16? Because one of those two has to happen.
No.
Explain that part.
GM is a call option on the future. The future is electric. GM's not electric yet, right? It's the internal combustion engine all the way. The future is transportation as a service, software as a service. You need software engineers for that. GM has great engineers, but they're hardware engineers. They had to go buy Cruise Automation to get those software engineers in Silicon Valley. Then you've got two big model changes. Electric, software as a service, gross margins going from 20 to 25, which is the hardware model, to 85, 90%, which is the software as a service model. Completely different DNA. This is where Tesla is going. There's a third problem GM has. It's called distribution. By law, in many states, auto companies cannot do over-the-air updates. Tesla has been doing that regularly. It updates, it improves performance, it corrects mistakes, flaws. GM cannot do that and is really going to have to go maybe through Cruise Automation and rebuild a company, right? And even if they were allowed to do it by law, how do most dealerships get their profits? It's service. What, is GM going to alienate its dealers? I don't think so.
Got to start with Tesla because for months now you have said this is a $4,000 stock. Given all the drama over the last few weeks, do you still think that?
Yes, actually. Our conviction has increased recently because of their new chip. We think they're 3 years ahead of any other auto manufacturer in two ways. One, very importantly, is the chip, and the other is their battery technology. So yes, our conviction has increased.
I guess the model that gets you to 4,000, right?
Yes.
First of all, what is that, a $700 billion market cap?
Yeah,
I mean, roughly speaking.
There.
So, I mean, there's a distance between here and there.
Yes.
Can he execute, because it seems basically like the cars are a Trojan horse for this bigger world domination strategy for moving people around and energy storage. But can he actually get every step along the way to bridge to that future, even if you thought it was going to happen?
Oh, we think he's arguably, Google's doing a good job, but we think Tesla is way ahead of the game. They've got 10 billion miles of data plus. This is an artificial intelligence project, and it is going to take Tesla from 20% gross margins to 80% gross margins. It's a software as a service, transportation as a service model. And we don't think until very recently, and I know there was a big kerfluffle around the conference calls, but finally, we had some very good questions around autonomous and trucks. Trucks is another very, very big opportunity. Autonomous truck platoons, we think, will transport freight more cheaply than rail. Trucks and rail are the same size market. So another huge opportunity. I mean, we were very interested to see that it has 52% of its market. Its market share has gone up from the low 30s to the low 50s, and that one of the most, there are 5 trade-ins that are the most popular. One of them is a Honda Civic. He is enlarging his market. So we think he's doing an amazing job. I think it does seem, according to suppliers, they're ramping to the 6,000 Model 3s per week. So time will tell.
Well, we want to dig into that more with you, Gabe, so stay with us. We're going to bring in someone who is actually bullish on Tesla, analyst Tasha Keeney from ARK Invest, who's here at Post 9. Still bullish?
Yes, we are. So Tesla's one of our top positions at ARK Invest. We're happy that the company stayed public. We think that the stock is severely undervalued today. So our bull case is that Tesla could go to 4,000 over the next 5 years. So we're long-term investors. We think of this as an autonomous electric vehicle company, and that's what gets it there.
We can get to those fundamentals in a second, Tasha, but the last 20 days, has that reduced your bullishness in any way, whether we're questioning possible investigations, whether we're questioning the leadership, whether the all-important CEO and brain behind this is overtired and overworked? Have you reduced your, say, ideal price target because of that?
Our long-term thesis remains unchanged. We're certainly following the story. Elon Musk has always been really transparent through Twitter, more so than other CEOs. And sometimes, that brings in extra scrutiny. But it also tells us more about what's happening in terms of the operational balance of the company, because he tends to be very honest. So, we've been happy with his use of Twitter so far. We think that Tesla needs Elon Musk to make this happen. He's a star figure. He attracts amazing engineering talent, and he's the person who gets his employees to really put in the extra mile and meet those production targets.
You're happy with the Twitter use so far, including funding secured and the fact that there could be a SEC investigation, shareholder lawsuits. That doesn't bother you?
So we're certainly following the investigation, but we've heard that these talks have been going on for over a year. We've heard that Musk did say that his talks with the Saudis have confirmed that he thinks he had that funding. Again, we're happy with the decision to stay public. We think that's the right move for Tesla. We think that, like Amazon, it should appreciate and value as investors realize this long-term opportunity. And really what people are missing is that Tesla's 3 years ahead on battery technology, on autonomous data, and on autonomous hardware. I mean, no one can catch up to them at this point.
Respond, Tasha, to the financials, because that's something that a lot of the shorts bring up, and that the second half of this year is absolutely crucial. Are you concerned about the funding in that sense?
So we just heard this past quarter that the Model 3 turned profitable. In general, Tesla's still scaling. So we would expect, there could be more rework than there would be at a more mature company like General Motors. Again, if you look at the long-term, the autonomous opportunity, it totally changes the business model. So if you buy a Model 3 and you're able to connect it to the Tesla network, their autonomous version of Uber, we think that you could get $10,000 in pure cash off of that vehicle from renting it out to other users. This is something that no one else is factoring in today. Until Tesla gets there, if they do need to raise money, we think they can go to the equity markets. We know that they're planning on using local money in China, local debt, to fund that factory. So for the short term, we think they're in a good position. But if they need to, we think they could raise $10 to $20 billion worth of capital. And we'd be happy that they did that to scale.
And vehicles, I mean, auto sales, they're down from their peaks, but they're still pretty close to their peaks. So we are seeing autos, just fossil fuel autos, still being sold.
So autos, we think, are also in the process of peaking globally, partly because, and this is going to happen sooner than I think most people anticipate, autonomous taxi networks are going to evolve. Tesla, we think, is leading the charge there, so to speak. And that means the vehicle miles traveled with electric cars, because capacity utilization of taxis is so much higher than personal cars. The vehicle miles traveled using electric cars is going to increase dramatically during the next 5 years. So many of the indicators that people use to gauge, hey, is this economy strong or not, the ground is changing underneath them because of new technologies.
I want to talk about Elon Musk, because he sat down for a podcast with Tesla bull Cathie Wood of ARK Invest. Musk talked about why he thinks Tesla is making such strides in becoming fully autonomous.
The reason Tesla, I think, is making rapid progress is because we have vastly more data, and this is increasing exponentially.
Joining us right now is the person on the opposite side of that conversation, Cathie Wood, CEO and CIO of ARK Invest, and we want to hear about this conversation. Before we get to the conversation, I do want to ask you about one thing which happened overnight. I don't know if you followed his tweets.
Yes.
He tweeted out that he thought that the company would produce around 500,000 vehicles in the course of this calendar year, and 4 hours later, he appeared to have, I imagine, talked to a lawyer and corrected that. Said he was correcting those numbers, that they would be delivering about 400,000 vehicles this year. He went on a month, then explained on a month-by-month basis. But as an investor, and he has been sanctioned already by the SEC about tweeting. They were supposed to put some kind of process in place, which it appears they have not put in place. Do you have any concerns about what's happening at that company? Putting aside the wonders of the vehicles and everything else and the investment case one way or the other.
No, I think what we hear from Elon, he's obviously got a very big idea,
right? And
he's running hard with it. So they produced 240 or delivered 240,000 last year. Their guidance is up to 400 officially was up to 400,000. He talks about exponential growth and how 6 months can make such a huge difference.
Right. But you also heard him on 60 Minutes say that that he is bad at making predictions and shouldn't be making predictions.
Well, I think he's very good at making long-term predictions. These short-term ones, no, because again, 6 months he could be off, yes, by 100,000 units. But let's put this in perspective: 240,000 produced or delivered last year. 400 this year, so up over 50%. Most auto manufacturers in the world are going to be down.
Right.
Let's just keep that in perspective.
If he had made those comments, though, while the market was open, would you feel differently?
I think everybody is beginning to adjust for Musk, and in this case, I would have as well.
What does that mean that the rest of the public market, the laws should not adjust for Musk, but the public should adjust for Musk?
Well, the public can do whatever it wants. I'm just telling you what I'm doing.
Right.
And I'm looking at more than 50% increase in deliveries this year, when most auto manufacturers are going to see sales down. I see a company that has 80% share of the electric vehicle market in the United States and one of the top selling cars, whether gas powered or not. And, the point he was making earlier was, hey, we went from 0 to it could be 500,000. He's trying to make a point. We're on an exponential growth path here. And what he doesn't say, kindly, is that other auto manufacturers are beginning to fall apart when it comes to sales.
Right.
And they are beginning to point to Tesla as a reason why.
So it's at $307 right now. You believe the stock is worth what?
So our bear case, I'll start with that, is $700 in 5 years. And that assumes that they are nothing but an electric vehicle manufacturer and that they lose a lot of share from here. Okay?
That they lose a lot of share from here. Who do you expect them to lose share from?
Oh, I don't know. Personally, I think going from 80%, they will lose share. We're saying to get to our bear case, they go down to something like 15% share. That's a global number. Our bull case is $4,000 in 5 years, and that assumes autonomous mobility, and that they're at the leading edge of it, primarily because of their data. They have collected more data by far. And they will continue to collect more data because those of us who own Teslas are doing it for them every day.
Let me ask you a separate question. He also made a comment, I believe in the past 24 hours, about the idea of autonomous vehicles, says that he will have autonomous technology ready to go by the end of this year. Let me just also contextualize that by saying that Waymo, the Google self-driving vehicle, cars, which have been in development for much longer, from what I understand, use LiDAR and all sorts of other technologies and have historically been considered much safer when it comes to self-driving cars, does not believe that they are going to be producing fully autonomous vehicles. I'm assuming what they call level 5 or level
4, level 4 probably.
I think but if you tell me that it's fully self-driving, I'm thinking of that we're going even farther than that.
He did say on the podcast that he thought that they would be there. Again, adjust for, exponential growth. And here we're talking about data as well. We do think he will be. The way he framed it for us in the podcast was, we'll be there. We just need to bring the regulators along with us. And to do that, we need to produce the data, show that this is safe. So if you use autopilot today, you will be changing lanes. Have you used?
Yes, yes.
Okay, so you understand.
But I think
it's a fancy version of cruise control, as far as I can tell, at this point.
Changing lanes is not.
I think what kind of stuck with me on that part of the comment is all of the accidents that have been involved, people say they weren't using it correctly. They were allowing it to drive without paying attention, and that has been the problem with it. When you have the CEO and founder who's such a big celebrity, like Elon, making comments like this, it just seems to me that it's more likely that more people are going to listen to him and say, okay, I'm going to let this thing do what he says it's going to do, even if that's what they tell you not to do when you're driving.
Well, if you do drive in one of these cars, if you don't touch it after a certain period of time, it's going to pull over. So they're going to override. I mean, he's trying to help people understand how the world's going to change and how he's going to transform it.
But you understand what I'm saying?
Yes, I do. And so from a manufacturing and safety point of view, by the way, Tesla has to be one of the safest cars out there, right? What's so interesting is you hear about every fatality in a Tesla car, but not in all these other cars. They happen every day, every day.
Fair point. But again, when there have been problems, they say it's because people weren't using that correctly.
And therefore, they have put in stricter controls from a manufacturing point of view. Yes, they'll just disengage.
Last time you were on, I thought, wow, that's way too soon for some of the things that you're predicting. You're very sort of aggressive about the movement, how quickly we can move on some of this technology. So I thought about you with the new Green Deal. You probably figure that's doable too, right?
That is not my political persuasion.
But what was it you said last time? Everything will be autonomous and it'll be Tesla and all taxi cabs will be autonomous in like 2 years or something?
Yeah.
Huh?
Yeah, you call me crazy. Yes,
I
yes.
do. That's true.
No.
But then I saw the new Green Deal and thought maybe you were like on the spectrum of crazy. You're way over here now.
Can I just ask you one more question? I'm sorry. I gotta go
or
back.
she can answer what I just asked her before you get to your question, but go ahead, Kevin.
No, we do see an autonomous taxi future. It will cost 1/10 what it costs now in a taxi cab here to go from JFK to Manhattan when we scale in autonomous.
Andrew goes on a helicopter from JFK to Manhattan
and that will be $75.
Don't you use Blade anyway?
So it will cost you.
I've never used it.
It'll cost you $75.
Right.
Passenger drone. When they're allowed.
Can I just go back? I just want to go back to the SEC thing that we started with, and here's my one question to you. Why can't you, and why couldn't you say, like I believe, and I'll tell you what I believe. I believe Elon is a genius. I think it's wonderful the things he's trying to do. I love the ambition. I hope he succeeds. I think it'll be great for humanity if he succeeds. At the same time...
He's already succeeded. He's already succeeded. Trying to do. He's done it.
And at the same time, I have to be bothered as somebody who cares about the law when he's tweeting things that are factually untrue, when there's a system that has not been put in place that he was sanctioned to put on. Why was it so hard to hold those two dualities? Why do you have to be?
Is this a question?
Yeah, I'm asking.
Really? Okay.
It's my view, but I'm just surprised because
Please explain.
So, as having been a portfolio manager for many years, I know how to adjust for what different CEOs say, given their personalities and their aspirations. So I see this all the time, especially with visionaries. I remember with the same thing was happening with Amazon for years.
Right.
We were considered crazy, and yet now it seems so obvious, right? I think the same is going to be true of Tesla. I really do.
Growth for a long time, but let's talk about growth. If you want to beat the markets this year, you might want to pay close attention to our next guest, who has doubled the S&P returns in 2019, Kathy Woods. ARK Innovation ETF, that symbol is ARKK, is up 23% so far this year. The broader S&P only up 11%. Biggest holding in the ARKK, Tesla. It makes up nearly 10%. She says that stock could rally more than 1,000% over the next few years. Let's bring in Kathy Wood, CEO and CIO of ARK Invest. Do you still have a $4,000 price target on Tesla?
Yes.
This is long term, I know.
This is a 5-year time horizon. That's what all of our forecasting is. 4,000 is the bull case, 700 is the bear case. It's rare for us to have a stock that meets our minimum hurdle rate of return in the bear case. So it's north of 15% compound annual rate of return to get to our bear case target.
Give us the 20-second case for why Tesla could go to 4,000 in 5 years.
Yes. Well, first, they are scaling the electric vehicle market. We think the electric vehicle sales in 2023 will be, in total, globally, 26 million units, up from 1.3 million last year. So that's a 20-fold increase. We're talking about exponential growth, but that's not the big story for Tesla. The big story is autonomous taxi platforms. We're moving from a hardware-centric, low gross margin model, which is 25-30%, Two, a transportation as a service model. They'll get a piece of every ride taken because they'll own the platform that these fleet operators will be riding on. And that's more of an 80% gross margin business.
What do you think is going to happen this week in terms of what happens in court? Well, we talk about what these numbers say and what happens in court and whether it matters.
Sure. Well, for the court case, not a legal expert, so I certainly can't say for certain. But we have heard Musk and Tesla say that on the production tweet, the stock really didn't move that much, but it did move on the announcement of the investigation. So when we compare this to the take private at 420 tweet, I mean, that was an obvious mistake.
Right.
Musk admitted that. He paid for it. This doesn't seem as bad, but we'll wait and see. We're not too concerned right now.
Would you be concerned if he lost the CEO title?
We'd certainly like him to stay on as CEO. For us, the biggest opportunity for Tesla is the autonomous opportunity. So until they get a fully autonomous car, we want Musk to stay at the helm of the company for sure.
And we talked about autonomy earlier, and given the rising concerns that it's going to be, we are a long way from autonomy. What's your take on where we are?
So we actually did a podcast with Musk, and he told us that the Tesla would be feature complete by the end of this year. And what that means is the driver still has responsibility. He thinks in another year from now, so 2020, the driver could fall asleep behind the wheel and the car would just take over. Now, given that Musk has very aggressive timelines, we think it's likely, say 2021 or 2022. But considering Tesla's data advantage, we think they could be first to market in what will be a natural geographic monopoly market, and it's worth $2 trillion globally, and it's virtually unaccounted for. So this is a huge opportunity.
And your price target on this company in the next 24 months would be what? 2 years out?
So we're long-term investors,
right.
So our price targets are 5 years out. Our bull case for Tesla with autonomous is 4,000.
Greg, you haven't shaken your head, but I think inside your head you are.
Yeah, there's one thing I agree with, and Elon Musk, whether or not he keeps the CEO title is completely irrelevant. You could put him in one of his rockets, send him to Mars, and he's still going to be the most important person at Tesla. So Judge Nathan, if she wants to hold him in contempt, has a pretty tricky issue to deal with. It's a great company. They deserve a lot of credit for what they've accomplished, and I think there is potential for some significant drama in the courtroom.
Okay, but you don't think the stock is worth $4,000. You don't even think it's worth what it is on the screen right now.
No, I think we have to take a close look at what the actual battery prices are. There's hard economic data out there. Bob Lutz has been talking about this for a couple years. I have the data, right? $240 a kilowatt hour is what they're paying for cells out of Japan. The cost of the Gigafactory is higher. And what is Porsche and VW paying? VW is paying $250 a kilowatt hour. There is no economic advantage on battery costs at Tesla. The cost of the batteries are too high for these massive growth numbers that people are projecting over the next several years.
And that's the basis of your bearish call.
Absolutely.
Okay, so it's not about autonomy. It's not about all of these other things that she's talking about.
It's the fact that the cost of the cars is way too high. They're too expensive.
Tasha, you buy that?
So on a range per kilowatt hour basis, Tesla has the most efficient batteries. So other automakers that are undercutting them on price are likely sacrificing performance. So this is what's going to allow Tesla to produce a car that performs well for much cheaper than competitors. And I mean, we've already heard signs of this in the news. I mean, there was an article saying that Porsche and Audi had done a teardown of the Model 3 and were basically scared because they realized exactly how cheap Tesla was able to produce this car, and they had to go rethink things themselves.
I agree with her on the battery issue. Sam Jaffe at Cairn Energy Research, who tracks battery per kilowatt hour and cell cost per kilowatt hour, he has Tesla well ahead of their competitors. Now, that may differ with what you have, but I buy into what Sam's, and I've looked at his research, and I buy into what he's saying in terms of the cost advantage there. Now, are they at a point where they're going to be making money on these vehicles at a lower price point, say $35,000? No, they're not there yet. But they are ahead of their competitors in that regard. Whether that holds is the big question.
When do you see these competitors coming online in a meaningful way in terms of true competition to the Tesla?
It's starting this year. That's why I chose to initiate with a bearish perspective, right? Porsche is going to come on with the Taycan. You've got Kia. You've got the I-Pace.
How many cars do you think they're actually going to sell?
So you got to look at the history. So the Cayenne, right? The first they said 10, then they said 20, then it became 40. So it ramped very, very quickly. They set expectations low, make a lot of money on the front end, and ramp. And Porsche, it all depends. Their business is making money, right? They're not about, fluffing numbers. So if they think they can sell 30,000 cars into the market over the next, 18 months and make great profit on it, they'll do it, right? But they're not going to flood the market to a point where, it compresses margins.
Do you think that poses a real problem?
I do. Well, I think it poses a problem for Tesla from the standpoint of let's finally see this vehicle. I honestly believe, based on Tesla owners that I've talked with, as well as those who track the company, we're tired of hearing the competitors are coming. The competitors are coming. Bring it out. Bring it out. And if Porsche's Taycan is as impressive as the initial indications are, then it will be a threat to Tesla. But until then, this is a little bit like the boy cried wolf. We hear it all the time. There's a wave of vehicles coming. Well, that wave of vehicles isn't here yet. It was supposed to be here by 2019. It's not here yet. When does it get here? If I'm a Tesla investor, I'm not too worried about this argument until we start to see these vehicles.
How much of the sales do you think is going to be driven by the autopilot autonomy feature that I think you're betting on is such a big component of all of this?
Yeah, so the way that we look at Tesla is we think they're 3 years ahead on a few fronts, on batteries, on autonomous hardware, and autonomous data collection. So they're the only automaker that's collecting data off of customer cars on the road. This allows them to basically train their machine learning algorithms at a much more accelerated pace than anyone else testing autonomous technology. So what this means is that they have much more scale. They could be first to market, and we think that autonomous cars will be very cheap. Autonomous taxis on a cost per mile basis will be extremely competitive to consumers. So these will be fleet sales.
Do you think that Tesla is going to get into either the fleet business, or do you think they actually get into the ride sharing or services, cars service business effectively?
Yes, so they've said that they're going to launch the Tesla network, which is basically their autonomous version of Uber. And actually just today, we heard Tesla say that they're going to do an autonomous investor day later this month.
Right.
So
we talked
know they're
about
focused
that
on
a
it.
little bit earlier. But when do you think that happens? What's your time horizon? Not the Elon Musk time horizon, because you often have to add 12, 18, 24, 36 months.
Yeah, I say give it another year. So 2021, they could have a fully autonomous vehicle.
Do you agree with any of this?
What I think people really need to focus on is the battery. So I was in Florida last week. I met with multiple suppliers of materials and equipment to Tesla. There's nothing fundamentally different to what they're delivering to Apple. Apple's building multiple dry rooms right now, or any one of the Chinese companies, than what is being delivered to Tesla.
Fair point.
Your supply chain is your cost. There's a lot of bad research out there. Traditional bad research on the sell side starts with a conclusion and walks backward. I think people need to check the hard economic data and take a close look and diligence that.
Tasha, I think it's crazy to think autonomous vehicles are going to be here in any form, and I'm not blaming Tesla for that. I'm talking about all the potential for bad things to happen, like the hacking, like regulations, like anything that comes in. I don't anticipate that happening. Does that change your stance if there's not an autonomous vehicle here?
So one, I'll say, I think the technology could surprise. And we saw that earlier this year, actually.
It surprised me yesterday when I heard about the hacking with the stickers on the ground. That surprised me.
Yes. So when, in general, okay, so for the technology to be ready, if you look at something like the DeepMind win against StarCraft, that happened years ahead of what you would expect, given what we've seen in the past in terms of improvements.
I understand the ability to do it, but the ability to tamper with it and the ability
Sure.
for it to actually be on the roads where people's lives are at stake.
Sure. So the thing about the hacking that you have to remember with Tesla is they're the only automaker that can do over-the-air updates that would actually be able to fix something like this.
After there's an accident.
So yes, and there will be accidents with autonomous cars. We think they'll be 80% safer than human-driven cars, but there will still be accidents. What
And it will be
regulators want to
someone's
see,
fault when that happens. It will be a programmer's fault. It will not be the operator of the car whose fault that will be. I
yes, it will be on the technology provider. They will take the liability.
The reason, so Kathy, for better or worse, because there's always two sides to a story, you at ARK Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year, and it's always been our largest position this year. and yet our fund is up 28%.
How is that? How does that happen?
Yes.
How does that happen?
It is because last year, when genomics was under assault because of reimbursement concerns and pricing concerns and so forth, we were leaning into those heavily. So you buy low, right? We were leaning into those. And so our second largest position, Invitae, which we think is one of the most important molecular diagnostic companies out there, riding down the cost curve of DNA sequencing, it's up 125%. It got as low as $5 last year. Today it's $18. So leaning into that has really paid off. And it's true with the entire genome sector. We're doing the same this year with Tesla, but our conviction level there is so high that it never left our top position.
How could it be so high? I mean, Tim, this is a stock that is, if you look at a chart of Tesla over the course of the year to date and the 1 year period, this has at best been a roller coaster ride. So, at worst been one that's trending lower.
But first of all, it's great to have you here, and congrats on the performance in the portfolio, because I think there's no question there's an active component to what you're doing, and I think I would like to invest alongside of that if I was an investor. With Tesla, I guess there's two questions. I think there's been some obvious issues in terms of performance and some obvious issues on the balance sheet, but that's my interpretation. It may not be yours. The first question I have is really just corporate governance risk, because I look at a company leaving aside an SEC investigation that one might argue is overdone. I think it's a company where disclosure and consistency and the same standards I would hold to any company, somehow for this company, no one seems to hold them to it. And how do you approach corporate governance?
So we have a 6-point scoring system. All of them incorporate ESG in some way, shape, or form. First one is people management culture. Nothing bothered us about what Elon was tweeting or anything until funding secured, which once we found out that was not true, we said, okay, that's not good. And so we did ding Tesla for management when that happened.
Does that mean a higher discount rate? I mean,
yes.
Mechanically, what does that mean?
Yes, but you know what our target is.
Right.
It's
not going to really move.
No. Yeah. But within a month and then 3 months, 2 of our other scores started soaring. One was we learned about their artificial intelligence chip. We saw the specs. Right. And our analyst, James Wang, came from NVIDIA. That's what they're replacing. And he said, oh my goodness, and he's going to write something this Wednesday about it. This leapfrogs the competition. And they're at least 3, if not 4 years ahead of the competition. And then a few months later, execution went up when not only did they not lose in the third quarter $700 million, but they made, this is cash flow, $1.4 billion. So that was a miss in terms of consensus expectations of roughly $2 billion. That's what happens with exponential growth.
So Kathy, though, I mean, let's put this in perspective also. The stock is down for a reason, partly because there's a fear of a possible capital raise that has to happen down the line.
Yeah.
They may have to issue more stock, raise more money, and that's going to dilute existing shareholders. Are you concerned about that aspect of Tesla, that they are burning through cash and that they need to raise more, and that could put pressure on the stock?
Well, I believe that's in the stock.
Or would you welcome that?
Exactly.
Is really a question I have, because what I wonder is why this is a company who has enormous cash burn and an enormous opportunity. This is the $1 trillion idea with $1 trillion worth of issues around it. Yeah. And I would be out there raising money tomorrow. Can the company not raise money?
Sure. Oh, it can raise money. I don't think Elon wants to do it at this valuation. I think he thought, and the company thought, that their autonomy day last week was going to give them a nice opportunity, that once analysts understood how far ahead of the competition they are, whether it's Waymo or Cruise, in terms of autonomy, and how soon it is going to evolve, and that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it, because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency in this stock. It is our highest conviction idea for a reason.
So let's do this. Tim, you as a manager and a former long-short portfolio manager have traded around positions, trimmed, added to, that sort of thing. Is it fair to say, Kathy, at ARK Invest, that just because Tesla is your top holding, that you just hold it there, or are you constantly managing around that position in and out?
So disruptive innovation is characterized by controversy and volatility. And so we know we're going to get opportunities to buy stocks. We lie in wait for those opportunities. Many people think of, because of what we do, disruptive innovation, that we're momentum driven. Absolutely not. We lie in wait. So if you just take Tesla alone, 2018, you're right, the roller coaster. If you take away the performance of the stock, which was up last year, just take that away and just look at what happened, what we delivered in alpha because of our trading around controversy. We delivered 175 basis points just from Tesla. And we get opportunities like that throughout the portfolio.
And I think that's impressive. And I think that's kind of a manager that I would want to be tactically, along with a fundamental view, invested with. I would push back on that volatility. First of all, congrats for laying in the weeds and buying stuff cheap. And that it's been proven out this year in your portfolio. But I look at a stock like Tesla, and over a 5-year period, the stock's done nothing, with being one of the most volatile stocks in the world, at least of the mega cap stocks. So I look at, and I could cherry pick numbers, but I could say, really off the high of 2014, you're down 20% by holding Tesla for 5 years when supposedly it had a huge competitive advantage. Yeah. There was no competitors in their space. Right. It was being priced as a technology company. And the stock really at a point where now it looks like there's some balance sheet issues. The competition's never been heavier, although I think you'll push back on that. I think I appreciate your argument, which is that they're not an auto company. They're not a tech company.
But even more, just let's take the electric vehicle. The Model S, 2012 it was launched. Yep. Not one of those competitors is anywhere near it. We're 7 years later. Now, let me take your other point. This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.